As a forex trader, you need to master on how to follow the trend. As the old saying goes, the trend is your friend. So if you are able to catch the trend from the beginning of a trend to the end of a trend, it will literally help you to make a lot of gains in the forex market. So in this particular video, I'm going to show you on how you can use this continuation strategy to be able to master on how to follow the trend, and also how you can identify when trend is changing this behavior, right? So if you are new to this channel, I'm Akamlo Forex. Don't forget to hit the subscribe button and also hit the post notification bell so that you'll be notified anytime I drop a new educative content like this. So with I want to make this very easy for you so that it will you if you are a beginner or if you're an advanced reader, it will be very easy for you to literally understand how these things actually works, right? So stay connected to the end of this video, and let me show you how you can literally plot these things on a market that is on a textbook structure before we come to the live market to find examples or to find how we can literally implement this in our trading journey that will help us to maximize profit and minimize our losses in the forex trading space. So without wasting much time, let's move into the structure. Let me show you how it is. In this textbook structure, you can literally see that price comes from this range, which is the high time frame range from the low to the high, right? Giving us a market structure moving to a downside, giving us a breakout structure. We have price breaking structure to an upside, giving us a multiples of what a series of high highs and high lows. As you can see, you have breakout structure, you have another breakout structure. So and then price got into the high time frame point of interest and begins to change a character. So in this case, we have price giving out a market structure shift to the downside from an uptrend to the downtrend. So if price is breaking this structure to the downside, this is this is a continuation. So if price is shifting from giving us this breakout structure, price fails to break another structure to the downside, and that's when we have a market structure shift or a change of character. So from this, we are now going to use these 7 institutional reference points. You can pause this video to screenshot this. Use these 7 institutional reference points to take your trades on this. So we have the fair value gap, we have the breaker block, we have the mitigation block, we have the rejection block, we have the order block, we have the liquidity void, and we have the all-time high and low. So these are the 7 institutional reference points that we are going to be using to be taking our trades. So from this, you can literally see when price give this retracement to the downside, it comes to this level. So let's say this particular point, we have a breaker block. So price tap into a breaker block, price tap into the breaker block and take the move to an upside. So here, price comes, give us a retracement and tap into this level too as well. So maybe we have a fair value gap or a breaker block there. Price tap into this and continue to move to the high to the high time. So when price tap into the all-time high, this particular level was our all-time high here. So here, so let's change this to be an all-time high liquidity sweep. So price come to take this and tap into the high time frame point of interest and give us a market structure shift. So hence price give us a change of character or a market structure shift, retrace it back to tap into any an institutional reference point around this level here. So price tap into an institutional reference point and continue to what? To sell. So now sell has what has taken place here. Price started to move forward, to move bearish. So price come, it moved to any fair value gap or any of these 7 institutional reference points before price continue to move down, come and tap into the lower time into the high time frame point of interest and shift in market structure and continue that same trend, right? So to follow a trend, this is how you're gonna use it. So let's move into the live market to find how this literally plays in the live market. In the live market, you can literally see that when price When price begins to come down, to move into the downside, price get to this level, giving us this break of structure. Price break this structure here. After price giving us this break of structure, another high was creating. Another high was creating at this level. So you have a high that is created here. Since this high is created, it fails to what? It fails to break to the downside again. So when have this particular high created, price fails to break below here to give us a break of structure here. So hence, when price failed to do that, what do we have? We have price giving us a shift in market structure at this level. So when price gave this shift in market structure, we have shift in market structure. So immediately price give you a shift in market structure, you don't need to be taking any sales again because we have a market structure shift. So you'll be looking for signals, any institutional reference point for price to get into before you can take your trade. So in this case, you can literally use this breaker block here to take an entry. So price get to this breaker block, you are taking a buy. So here, price, that's a reversal entrance, right? So in a continuation, you can see when price tap into it, it break this structure to an upside. So price break this structure, price give us this particular level as our level of what of inducement. After price giving this inducement, it finds any institutional reference point, which is the fair value gap here. We have a fair value gap, price tap into this fair value gap, or you can also use this order block too as well. So price tap into the order block here, and then move to what? Shoot to an upside. So if price move to an upside, we have another break of structure. So we have price giving us another break of structure. So after price giving this break of structure, we are waiting to see price to come to take an inducement, which is this particular level here. We have an inducement here, price give this inducement. After price taking this inducement, it finds another institutional reference point, any of these 7 institutional reference point before moving again. So in this case, it uses this fair value gap. We have a fair value gap that is resting here. So price come to tap into the fair value gap and shoot to an upside again. Give another buy. So this is how you'll be taking your buys positions when it comes to using the continuation strategy or the continuation trading. So here, so you can literally see when price break this structure, we're having our all-time high at this level. This particular high, we have this high here. We have this particular high here where price come to sweep the liquidity above that particular high. So if price give us this liquidity sweep, we should be seeing price to give us a market structure shift, right? Price should be looking for a market structure shift. So in this case, this is our lowest point where price needs to take before price needs to take this level before we can be looking to to take a sell moves at this level. So in this case, you can see price has swept this liquidity. We have price sweep this liquidity, price sweep the liquidity, and then push price higher. After pushing price higher, it finally find its way to break this particular level, giving giving this. Okay, this sweep this liquidity, it didn't break that level. It maintains here because this is a break of structure, so giving us another shift in market structure at this level. So we have shift in market structure here. So price shifts here to an upside after sweeping and then take that short sales to a shift in market structure to the upside again, and later come back to this fair value gap again. So tap into this fair value gap, which is our institutional reference point, and then shoot higher to expect this. So if you see price using a particular range, moving inside a particular range, that means that we are having a consolidation level. So as you can see from here, from this zone to this level, price was literally consolidating, like you can see that. So when price comes to this level, price fails to break this particular box here, we are seeing price literally give us a consolidation move, right? Before finally breaking this consolidation zone, before we have price break the consolidation structure from here. So we have price breaking the consolidation here. So after price giving this consolidation, break this consolidation level to an upside, giving us a break of structure, we continue using the continuation one, the continuation entrance models. So here you can literally see when price break comes to the high, it tap into this particular level, which is our fair value gap. Here price tap into the fair value gap. After tapping into the fair value gap, we have price break structure to an upside again, right? Price break structure to an upside. After breaking structure again, we have price what with this massive displacement, and this is an example of a liquidity void. So you can see here we have in this particular move we have price giving us a liquidity void. So from the low here to the high here, that is a liquidity void. You can see this massive displacement giving us a multiple fair value gaps in here. So first we have this fair value gap, we have a fair value gap here, which is beneath here. We have a fair value gap. We have another fair value gap on that same move here. We have another fair value gap on that same move. So that is an example of a liquidity void. And then the psychology behind this liquidity void is that if price give you a liquidity void, it is likely price need to retrace back to at least 50% of the liquidity void. Price need to trace back at least 50% of the liquidity void before what? Before continuing the trend again. So in this case, you can literally see that when price create that liquidity void, it comes to fill 100% of it. So price filled 100% of it and then continue moving to an upside. So in this case, one may ask a question. So since we have a multiple fair value gaps, which fair value gap are we supposed to use? That's when you apply your FAPE level. So use your FAPE, take your FAPE from the low here to the high here and see which levels we can find in our demand in our discount level, right? So in this case, you can literally see that the one that we have here, it is fully in the discounted level. So hence, we're gonna use that one to take our trade. So this is how you can literally use this. You can see when price moved, it gives this structure again. So this is how you're gonna use this to master. You need to master this move, and then don't forget to. I have some of the institutional reference point is explained in my channel, my videos, so you can literally go and watch. I have a lot which I'm going to record all in step by step for you to use it to take your trades. So it's very, very important as a trader to literally know how to use this particular approaches. So guys, I'm a Camlo Forex logging out. Wish you happy trading.